Welcome back to the Property Management Success Podcast. Here with Mark Brower on the Property Management Aid Station. Mark, how you been doing this week?
I'm doing great.
What's going on with your camera?
Oh, shoot.
There we
There
go.
we go.
All right.
How are you doing, Tony?
Bring that mic up so I can hear your beautiful voice. There you
Hello.
go. Yeah, there you go.
I think you mean turn up my levels.
Either way. I think it's one of those mics where if you put it next to your face, it'll pick up the sound.
It always grossed me out when singers would basically their mouth was on the microphone. That seemed so wrong to me.
Could you imagine after they're traveling and they've done a series of shows, those things smell like beer and sweat and just
Okay.
gross.
All right, that's enough.
All right, let's
I
get
didn't
to
need
it. So what's been going on in the world of Mark Brower?
Oh, you don't want to know, man. I was in Germany and I had to cut my trip short. There was some drama, family drama. So I'll have proper boundaries. I won't have porous boundaries and share too much on that. But it was really fascinating leadership development opportunity for me. And so I'm back in sunny, hot AZ. What's going on with you?
What took you to Germany?
Well, my sister's lived there for 14 years. She's a professional opera singer. That's been her home. And I, because of some family dynamics, I never was able to get over there and visit her. And this was my first time. And so I was going to go over spend, I think 13 days, starting in Munich. We were going to go to several countries. And then I was 3 days in, and decided I needed to come home. And that's what I did. Cliffhanger.
Okay, well, all right. Well,
Become
not to
my
belabor
friend, and you'll hear the full story.
Yeah. Follow Mark on LinkedIn. Okay, so
I actually called you. I called you from Germany because you're my buddy, and I was like, I got to call Tony. He's a lifeline. And then you didn't answer, and that's okay.
You know what's amazing was I was actually busy at the time, but I saw the call come through. I couldn't answer it, and I'm like, he'll leave me a message.
Oh,
And he didn't leave me a message, so I'm like, all right, well, must have butt
must not be
dialed.
important. Yeah.
If I would have known you were calling from across the globe, I would have stopped everything to talk to the international traveler, Mark Brower.
Yeah, man.
Okay, one last thing on this Germany thing because
Okay.
I'm intrigued.
Mm-hmm.
Your sister's a professional opera singer living in Germany. Is she singing opera in German or English, or is the opera
German,
its own,
Italian, Spanish,
oh my God.
English,
That's
French.
talent. That's talent.
Well, you memorize the lines, I'm sure.
Okay, right. Well, speaking of memorizing lines, we didn't do any of that for this show here, so
True.
we're live. I wanted to talk to you
I was
about.
feeling anxious.
Yeah, I wanted to talk to you a little bit about one of the things that I've been noticing in the property management space is everybody's talking about how much property management is changing. And everybody's talking about how they need to get out in front of these changes. And maybe it's just the circles that I'm in. Maybe it's not everybody. Maybe some people are. What are you doing? Looking at
Moving some high circles, so I believe it could be the circles you're moving in. But yeah, continue.
Okay, well, so I know it's busy season. I know that it's really busy for a lot of people. And so a lot of people are just head down, just trying to get their leasing properties leased. It's the summer season, trying to get everything done, trying to get move-ins, move-outs, property turns. So, I get that if that's what your focus is, but I've also been hearing some chatter around. I know you've been promoting here lately. We're not property managers, we're asset managers. I know we've had other people promoting things
Jeremy
about.
Pound, he's all about it right now.
Yeah. I think you guys are. I still think you're trying to chisel your way into a stone, looking for
Did
something
you just
that's
call
not
me
there.
you guys and group me in with Jeremy Pound, like some kind of a disparaging you guys? Are you what's going on here?
Well, it's. I've learned this from. There's a troll in the industry, and I've learned this that if you group people and then you falsely state what they've stated, and then argue against that false statement, that you can win just about any argument you want by argumenting on false pretense.
Don't get me started. Don't get me
All right.
started.
Okay. So back to what I was talking about. So, yeah, I just hear a lot of people talking about like what the changes in consumer expectations, the changes in what software is available, the introduction of AI and Chat GPT. And I want to put a pin in this because I want to come back to Chat GPT in a minute because I think it's already showing that it's dumbing down America. But we'll come back to that.
Mm.
Okay, so have you noticed any of that? Have you? Am I just kind of like
Have I
talking in
noticed
the wrong
any what?
circles? But
Are you asking me if I've noticed the things I've been talking about? Yes, I've noticed them.
well, aside from what you've been talking about, the other things, have you noticed people talking about the fact that property management is changing at a rapid pace, more change, more quickly than we've ever seen
I
before?
don't know. I don't know that it's changing faster than we've ever seen it before. But I guess I'm not super objective on this because I've just sort of entered the conversation in the last couple of years, and yeah, it feels like things are changing, but I don't know how fast they changed before. Look, I think that what's real to me is we've been a commoditized service industry, extremely difficult to scale, extremely hinged on creating, extremely dependent on creating high trust relationships with unsophisticated people that are thrust into a situation they don't fully understand. They think they understand it, and it's like, okay, well, if what's a question worth asking? And the question worth asking is, what's the most good we can do? Because if we can create the most value, if we can harness our gifts and talents, our time, energy, our resources, our skills, our experience, and if we can create the maximum value, then hopefully that's worth working for, and the market rewards us with maximum profit. And if you're in business, and we're not running charities here, so maybe that's the right question to ask. And if we've got diamonds under our feet, Tony, we should mine the diamonds under our feet. And what does that mean? It means add more value to our clients. How do we do that? We raise our vision, we raise our sights. Had a fascinating conversation with a gentleman yesterday about his wealth builder program because he saw that I had created a wealth builder program on, there's a link on my website. Pretty excited about it. It's in beta. I like jumping off the cliff and building the airplane on the way down. And so the urgency of the forced urgency is what helps get my juices flowing. But I'm super jacked about this. And I don't know if we've talked about it before, but I think that we could take a page out of Mr. Cooper, who was recently acquired by Rocket Mortgage, and they also acquired Redfin. They got this vertically integrated thing. It's going to be a really big deal in real estate. We should all be watching that. But I think if you look at Mr. Cooper, they did to loan servicing what we have an opportunity to do to property management, and it's go deep. Go deep with the trust. We have people's attention. How valuable it is to have someone's attention in a meaningful way. How deep can we go with that attention and trust and add the most value? And I think we're barely scratching the surface. The reality is, sorry, I'm on a tirade. The reality is it's very, very, very difficult to scale a residential property management company. So maybe not a small part of winning in this industry is going deep with the clients. And it's cool because I haven't seen people really figure this out yet. So I think it's worth talking about.
I would agree with that. So
Verbal
I would
vomit
agree
over.
with what's that?
Verbal vomit stream over. Go ahead.
No, it was good. It was good. So one of the things that I really enjoy about our friendship is neither one of us will just agree with the other one because the other one has an
Uh-oh.
idea. We're not
You're
going to
gonna
just
argue.
support it. And
You're gonna
so
argue
what I
with
like
me.
about it is we owe it to each other to poke holes in each other's ideas. And if we can plug those holes, if I can defend, if I have an idea and you start poking holes in my idea and I can defend those, if I can plug all of those holes, then I feel like I've got I'm pretty confident about the idea I have. I feel like I've got a pretty good
Sweet.
idea to move forward. And it's the same with you. I know you've been really leaning into this wealth builder program, being a asset manager versus a property manager. And I feel like I owe it to you to try to poke holes in that. And I've done that in
Yes.
the
Thank you.
past. And so I'm excited to see. I do think that leaning heavy into the relationship and going deep, that's always been my philosophy, is go deep before you go wide. And once you go deep, it allows you to then go wide because of those deep relationships that you have. You get connected with other people who want that same deep relationship. And so I agree with you that the way that we can create staying power and growth in property management is to go deep. Now, you and I have some different ideas about what that means to do that. And maybe it's just in the messaging. Maybe it's not that you are trying to create people through a wealth builder program and create clients that need an asset manager. And maybe it's just the language you're using where I'm just looking to provide as much value to the clients as I can. And maybe that means helping them buy additional properties, but maybe that's not what they need. And so maybe that's not what I talk about. So that was my verbal tyrant, as you said, tirade
Tirade.
in response. So
Great. How would you like me? What would you like me to talk about with respect to your reflection there?
well, I think we agree that the value is going deep and charging more for providing more value
100%.
than
100%.
going thin and saying, "Hey, I'm the cheapest on the block, so use me." You're not going to get much, but you're not going to pay much either.
Right.
I think that
Let's enter
model's
into
gone.
a high stress, low touch relationship where I manipulate you with a low fixed monthly management fee and abuse the trust you place in me to extract as much creative but not value led money from the tenant and abuse them, cause them to move out early because they're kind of sick of my low responsiveness and my excessive high fees. And let's rinse and repeat that at scale because you're too dumb to realize the difference. Like, that's not the relationship I'm looking for. I'm looking for hey, I'm going to take the risk and be like more honest than almost anyone has ever been about the realities of residential property management, at risk of you saying like, wow, I don't know if I want to sign up for that. Competitor, Y down the street isn't saying any of those things. They're just going to tell me it's going to be really rosy, like walk in the park. So no thanks, Mark. But the people that do make it through that filter are going to be like Mark Cunningham's like 10% churn rate and more likely to like give me the support I need. The more likely to actually get to the finish line in terms of like having a fighting chance of building wealth. They're more likely to sell that property with me and buy other properties through me. I just did this analysis with my director of operations before lunch. So in 2023, we were adding 20 doors a month. I was super excited. I'm like, sweet, we're on our way to a 1,500 unit property management company based on our churn rate. And then inexplicably in 2024 and so far in 2025, we dropped back down to about 10 doors a month added. And it's been really hard for me. I've been really sort of frustrated, and I started a marketing department. It's not going as well as I'd like. We don't have the increase in lead volume. Like, I'm really sort of like beating myself up about it. But here's the reality. The number of doors added, this holy grail metric of residential property management growth, is actually nowhere close to the best possible metric for growing our business.
100%.
I would rather so here's a contrast. I would rather add 10 doors a month than 30 doors a month in with these conditions. I'd rather add 10 doors a month with people that would stay with me at a 10% churn, and the 80% of them are likely to transact one time with me, or let's say everyone on average transacts one time. Some people do 2 or 3 transactions, some people do 0, but on average, this group of people transacts one time with me and they stay with me at a 10% churn rate. I would take 10 doors a month over 30 doors a month that stay with me 5 years with no transactions. And guess what? 30 doors a month at a 20% churn rate is how many? I'm going to pop quiz. What's my plateau size of property management company on units if I'm doing 30 doors a month at a 20% churn rate? Go. I started my timer.
I don't have my chat GPT pulled up, and I don't have a spreadsheet.
It's super easy. Super
Okay.
easy, Tony.
All right.
You take 20% churn rate means clients stay an average of how many years?
5 years.
5 years.
Yep.
You take the rate at which you're adding doors a month
Mhm.
times the average stay, 30 times 5 is the that's the ceiling. It's super easy math. That's the ceiling that your property management
Did
company will grow to.
you just insulted me? I think because I couldn't figure out that formula, and then
Yeah.
you said
Super easy math.
super
Yeah,
easy
yeah.
math.
No, I didn't insult you. I just opened your eyes to a hack that you weren't aware of.
Thank you.
Yeah.
Appreciate the reframing.
So, so I'd rather, okay, and so let's do the other one. 10 years, 10 doors a month. 10% churn means clients stay with you 10 years. 10 years, 120 months. 120 months times adding 10 doors a month. 1,200 unit property management company. That's your ceiling. And that's not surprisingly, that's about where Mark Cunningham is at. I think he's 1,200, 1,400 doors and he has a 10% churn rate. So guess what? He's adding 10 to 11 or 12 doors a month. Mark, if you're watching this or somebody knows Mark's business and I'm wrong, please correct me. But that's how the math works out. So I'd rather have a 1,200, that's a 1,200 unit property management company. I'd rather have that business that has lower drama, lower resource costs because I got higher supportive clients, and everybody transacts on average one time with me. Are you kidding me? I will be way more profitable, way more peace of mind, way more higher satisfaction with the business. And so I'm reframing my entire outlook on property management success from I'm going to be the first person to ever figure out how to organically, exponentially scale a residential property management. Guess what? Some problems are too hard. Peter Lohman and I walking through the Grand Canyon, one of the most important takeaways, you and I were both there. Peter and I were in the back because we took the wrong way back from Ribbon Falls or whatever.
We're gonna dig into this. We're gonna go into Mark Brower, the ultra runner, leaving his pack on the side of the trail, getting lost, leaving no water in the bottom of the Grand Canyon, leaving
okay.
no water,
That's
and
not
taking
fair.
a city slicker with you. You took somebody that had no business leaving their pack with
Yeah.
you, Mr. Peter Lohman, great guy. Had some complaints about the Grand Canyon. Had some complaints about the way that the National Park Service took care of the terrain in the millions of years old or whatever it took to carve out the bottom of the Grand Canyon. He was not pleased that they had a bridge that was washed out by the water and that there wasn't better wayfinding signs.
Yeah, that's
you
actually
had no
really
business taking him in to the bottom of the Grand Canyon. I'm sure you guys were lost in this wonderful conversation, but leaving your pack and leaving water, just I'm not sure what you were thinking there, Mark.
That is so off, but it's hilarious.
Okay, I'm happy.
We're not doing that right now. What's funny to me is you just looked down at a piece of paper like you'd written that down, like you were going to take me to task, and this just seemed to be an opportune time to do so.
I've been waiting for my moment.
You have been waiting. I could tell that was planned, man. So I'm not taking the bait. I'm going back to the one I'm talking about, if I can remember now. But Peter Lohman said to me as we're walking up an unnecessary hill that you guys bypassed because you know
that was called Asinine Hill. That hill actually has a name called Asinine Hill.
Yeah, you wrote that down too. So Peter and I are walking up this hill that's totally unnecessary, and he's telling me, he's like, 95% of the deals that get across Warren Buffett's desk, he just puts in the too hard pile. And I can tell he's leading me. He's leading my thinking. Like he's leading me to this conclusion that property management is just too damn hard. And maybe it is. Maybe property management is not worth investing. You're going to use this as a clip to introduce this session. Maybe property management is not worth investing our best efforts, time, and energy to try to actually be the first person to ever crack that code and build that exponentially growing organic, property management company. Maybe that's not a worthy goal. But you know what? I've been slamming my head against that wall for 14 years, and look where it's got me. But maybe instead we ask the question like, hey, what's the most good I can do in this sphere? Maybe I could be curious and open to what's the biggest this business that I'm growing. how can it fill the measure of its creation in a way that I'm not forcing it, ramrodding it, like putting my aggressive will to it, and I say instead like, hey, what if I just got maximally curious about the most value I can add, and see what and get maximally courageous about the most honest I can be, and then see what happens, and then see what it grows into. And with all my excess energy, go hike the Grand Canyon with Tony Klein and get ridiculed after we get back.
Dude, I brought you out there as one of our experts to help keep people safe,
Oh
and
my
you're like,
gosh.
just leave your pack on the side. I'm sure it'll be fine. I'm sure we don't need water. It's not that hot in the Grand Canyon
All
in
right.
June.
I'm not
Okay,
doing this.
so so I want to. You said something. You mentioned courageous, and this is just a total. This is a side quest right here, but one of our core values in our company is to be courageous, and I want to just share the difference between courage and bravery because sometimes they get interchanged. And to be courageous is to feel the fear and to do it anyway. To be brave is to just have enough reps that you charge into battle and you don't even have that fear. And so I think you need a combination of bravery and courage. But I think that the majority of the time, the entrepreneur lives in that space where we need to be courageous and do things that we're not comfortable with because we know that it's the right thing to do.
You know what? Property management done right requires more courage than almost any other business I can think of. And I'm gonna qualify that and say that if we answer the call to show up in an uncommon way in our relationships with it, because I think there's a lot of opportunities for us to play small, to act small, to come to the point of reckoning with an owner and take an easy way out because we just don't have the courage and the skill, mind you, to have a really bold, possibly transformational conversation with the owners. And I hope I'm not overstating that, but the reality is I came up to bat with owners for years in this business, and then shirked away with my tail between my legs and took their direction because I concluded, man, they just can't handle the truth and they don't have perspective, or I'm not good enough and they're calling me out or they're holding me accountable. Like, the reality is, and this is a totally separate topic, but I'd love to talk about this at some point. The reality is we have an incredibly unique, possibly very impactful opportunity to help owners shift their mindset and transform into like the more successful business owner. And that's connected to this idea of asset management and real estate investment advisory and wealth building and everything, because those things don't happen. You don't play a bigger game until you become a bigger player. And that's just the reality. And property managers have this tremendous opportunity. I'm reading these books about boundaries right now, and the gateway to successful, healthy relationships is healthy boundaries. And it's like, if we really understood healthy boundaries and put healthy boundaries out there with courage and bravery and high skill with our owners, it would be property management's already a wild adventure, but that my friend, is probably the most adventurous thing we could do. Like, are you kidding me? Challenging ourselves and owners to engage with uncommon vulnerability and honesty. Like, that changes both people. I'm talking about like calling an owner out for being short-sighted, fearful, cheap, and unsupportive. To their face in a way that invites them to level up instead of pissing them off. Like that is a cool thing. Sorry,
So
tangent. I love that. I love that idea, that topic.
let's tie this back to the first part of the conversation we were having, where we were talking about it's really hard to scale, to grow in property management, to take something and scale that exponentially by focusing on the growth. And I've I've got a friend of mine who 5 or 6 years ago was making the rounds, doing a lot of speaking. He still does some, not so much anymore. Guy from Texas, and he used to talk about, and I'll probably get the number wrong, and I'll probably get a phone call from him, but it was essentially he was bragging about basically growing like a door a day or something like that. But yet, if you looked at his door count, and he would look 3 years in a row, he was almost the exact same size. And so it was like you're doing a great job of just saying yes to everybody, but what happened is you're just putting all the marbles, all the people in the intake part of the funnel, and then they're falling out the back end. And I think you alluded to this earlier about you grow better by keeping really good clients that you've brought on for a really long time versus bring somebody in, churn them out, and churn out the back end. So if you have a really high churn rate, you're going to have to bring in a whole bunch of clients just to break even. And so if you have a really low churn rate, I would rather bring on one door a month and zero churn than 10 doors a month and 8 doors churn, because
Okay.
all of that extra work I have to do, all the extra just hassle of, now I'm not talking about positive churn. That's a different, we can talk about that. We've
Yeah, we've
had
talked about it
episodes where
before too.
yeah,
So
but
here's an analogy. This is a ridiculous analogy, but here's what came to my brain. I'm thinking of like the incoming client, right? The input, and then there's two buckets, and they're not buckets. Actually, one path is the blender, garbage disposal, paper shredder. Now, what's the right thing?
well, I
And
know that I was listening to the podcast by the Everness folks, and they were talking about when they would interview somebody, they would put them through the grinder. They were talking about the meat grinder and having their head explode. So I don't know if that's
that's good. Yeah. So like if you could, I know this is oversimplification, but let's say you put a wall right in the middle of like, okay, these are all the clients coming in, and they're either group A or group B, and group B is like, it's like a slow cooker. It's like a crock pot. People go in, they marinate, they stay with you, they age well. It's just, it works. Like they don't. It's a pipe dream to think like, oh, they'll never leave me. Well, maybe they'll never leave. But like if you're in this business 30, 40 years, most people eventually will churn out. Maybe not. Maybe not. That would be super cool actually. In intergenerational wealth building, family legacy. You're managing for their parents and then managing for the next of kin. Like, man, that's a cool idea. But so yeah, so maybe it's like, this is, if we could if we could just select or choose or identify the clients that are going in the crock pot and they're just sticking around. And sure, we're bumping into each other sometimes, but they're open, they're adapted, they're teachable. They're supportive, and on the other side, you have like this whirlwind of activity. You've got this like blender that's just, everybody that comes in is out within 3 years. They don't transact with you, and they're a big cost of resources on the way. And guess what? They're also a huge liability. They're a huge threat to your online reputation. Like okay, so if we could, and I was just talking to my director of operations about this today, if we could perfectly identify this second group of people and say no 100% of the time, we would do so. We would absolutely do so. And so then the question becomes, what kind of a process makes it more likely that we correctly identify which group they're in? And is that worth focusing on? And I'm saying 1,000%. And if you want to go there, I have like some ideas, super fresh ideas I'm really excited about building that I think will make a big difference in that.
okay. Before you do that, I want to go there, but I want to give you an example to our audience of something that is exactly what you were talking about. Getting really clear on who you were designed to serve, to speak the messaging to it, and then to have the systems set up for that. You and I have talked about this in the past, but my company that I ran here in Colorado before we did our merger and expanded and did all of that, when I was just in Colorado, I was the downtown Denver loft and condo sales, leasing, and property management specialist. And that was a huge mouthful. But we were downtown, loft and condo. We did our sales, we did leasing, and we did property management. But if you asked somebody, could you go across I-25 less than a half mile away from where our office was? The answer was no. We were very specific on the area we worked in, the type of property that we managed, the type of owner we managed. We were really clear on who we were designed to serve. We built our messaging around that. I would tell people, if your property is too far to walk from my office, then it's too far. But if I could walk to it, or one of my team could walk to it and be there in 7 minutes, why would you use anyone else? And so getting really clear about who you were designed to serve, not just, so we're going to talk about the location, we're going to talk about the type of client they are, the type of property they are, but it's getting really clear and defining that up front, and then having the systems to be able to support those people. So, we were really good with working with people who needed to move with moving trucks in downtown and get into the docks, and dealing with one-way streets and vendors that hated to come downtown because they'd have to pay for parking twice. They'd have to drive around the block for 20 minutes looking for a spot, and then they'd go up to the unit and look at what the problem was. Then they'd have to leave and go to Home Depot and do that again. If you have a system set up where you've got people like that, then you can be very specific about who you want to work with, and you can say, no, I'm sorry. I'm sorry that you can go out and get a bid for you want me to go get 3 bids? No, this vendor will do the work. This vendor will provide you with the best value. I'm not going to go get you 3 bids, and here's why. And so having that system in place allows you to do what you said earlier, which is be bold and courageous and do the right thing for the owner, even when sometimes they don't know what that is themselves, or they argue against it themselves.
Yeah, because you know who you are. And, this conversation makes me think like, well, duh, there's a reason there's 40,000 property management companies nationwide. It's because the market's needs are met with this niched specialization. And, like I wouldn't want to do it, but maybe the way to exponentially, scale a residential property management company is to have these unlimited niched offerings, with like, and by the way, hey, when I play this on my computer, can you hear it?
No, I can't hear anything right now.
You can't hear anything? Okay.
Are you playing it?
Yeah, I was playing something. I'm gonna have to figure out how to pipe that in, because I wanted to play something real quick. But hold on a second.
I think if you share to the screen and then also share tab audio, then we'd be able to hear it.
Here we go. I'm going to share screen. Here we go.
Are you getting it queued up?
Did you hear anything?
I heard a little bit of background noise.
Oh, shoot, man. All right. We're going to try this one more time. You can cut this out. Also share tab audio. Bro. All right, tell me if this comes through. No?
Nah, man.
All right. Abort.
Okay.
So, I was playing Uptown Girl for you.
Oh my God. all that dead airspace. I might just leave this in here. I might leave it in the podcast just so the people
she's my Uptown Girl.
They're so excited to hear what the mighty, almighty, powerful, and all-knowing Mark Brower has to say. And
I think you overstated that. You were her downtown boy. You were her downtown man. That's what I am. So I'm going to get you a plaque that says I'm your downtown man. That's what I am. Every time you say
it could have been, I could have been anything, right? But it was defining who I served. I was a specialist, which allowed me, by being that specialist, it allowed me to charge fees that I may not have otherwise been able to charge. It allowed me to define the type of service, and it allowed me to get really clear on, I don't want to work with that guy because they don't need what I want to provide. They need something else, and I'm not going to say yes to it.
It's fantastic.
Okay, so you were
Fantastic.
gonna you
Are we gonna
mentioned
go?
you had some tools.
How long are we gonna go with this? I mean, like, what's the ADD
What do you,
level of our audience here? Are we gonna
what do
like
you what do you
cut
you
this
got
off?
somewhere to be?
Well,
You got
no, but we've been doing smaller episodes. I don't know if we're gonna go back to back today.
we are, but I want to. So let's close out with this. So you mentioned before I went on my little rant, you mentioned that you had some ideas about growing, and some tools to be very specific about who you're serving.
Yes.
Okay, so let's hear those and then we'll wrap up.
You will hear those in the next episode.
Okay, then, and I want to talk about a couple of other things in the next episode. We're going to talk about that. We're going to talk about how much would you pay to keep a client, and not don't answer that now. It's the next episode.
All
And
right.
then lastly, what I started to tease with, we're going to talk about how ChatGPT is already dumbing down America, and it's actually dumbing down ChatGPT already as well.
There you
So
go.
yeah,
Dude, you are not going to want to miss this next episode. For our tens of groupies out there, stay tuned.
we have tens with an S now.
I don't know. I mean, I think
We have listeners in I will find out. We had listeners in 43 states. So we'll see
43
if we're in all
states.
53 states yet.
Wow. Well, one person from 43 states.
Hey man, we're almost nationwide at that point. All right.
Okay.
Let's wrap this up. Let's get them
See you
out of
soon.
here.
All right, get back out on that trail. You got it. We got you with it. This is the Property Management Aid Station, Tony and Mark. And, hopefully we shared something with you in this little break that you had from your ultra trail run, property management, business building trail run that gives you some insights or some encouragement. We're here for you. We'll see you in another 5 or 6 miles.